Hi, this is Leanne from Global Media Networks with the business news for today. The government revenue from taxi tobacco has remained intact following hikes in taxes, while Ceylon Tobacco Company plc earnings have dipped in comparison to recent quarters. In the first quarter ended 30th March 2012, government levies amounted up to 15.29 billion rupees, up by 1.2 billion rupees from 14 billion rupees a year earlier, and marginally up from 15.11 billion rupees from the fourth quarter of 2011. Excise revenue from tobacco formed the bulk with 12.99 billion rupees, followed by the VAT amounting to 2.19 billion rupees. Fitch Ratings has affirmed Sri Lanka's foreign and local currency IDRs at BB negative. The outlook for both ratings is stable. The country ceiling has also been affirmed at a BB negative, and the short-term foreign currency IDR at a B. The ratings reflect Fitch's view that the authorities have taken appropriate action to correct recent pressure on the balance of payments and place it on a more sustainable trajectory, said Philip McNicholas, director in Fitch's Asia-Pacific Sovereign Ratings Group. One of the leading Dubai's corporate companies is suing against the Ceylon Petroleum Corporation for the allegedly fraudulent encashment of its performance bond to the tune of $100,000. This dispute is now before the arbitration tribunal comprising the arbitrators Tilak Marapana, retired Justice K. Balapata Bendi, and Ronald Pereira. The Central Bank on Friday said earnings from exports increased by 7.6% to $879 million in February 2012, while expenditure on imports increased 27.9% to $1,581 million over the corresponding month of the previous year. The largest contribution to export earnings in February 2012 was from industrial exports. Industrial exports grew over 3.3% year-on-year in February 2012, mainly driven by gems, diamonds, and jewelry and rubber products. Export earnings from gems, diamonds, jewelry increased by 34.1%. Earnings from rubber-based products increased by 17.5% due to the continuous high demand for the major export destinations, particularly from the USA. Earnings from textiles and garments exports, which amounted to about 40% of the total export earnings, increased moderately by 1.4%. Earnings from petroleum products, transport equipment, food, beverages, tobacco, leather, travel goods, footwear, and ceramic products declined in February 2012. Earnings from agricultural exports declined in February 2012 as a result of lower performance recorded in traditional agricultural exports of tea and rubber. A 306-room luxury hotel is to open doors in October 2013, making it the first major global brand to debut in post-war Sri Lanka architectural contract awarded to W.S. Atkins, designers and engineers of Dubai's iconic Burj Al Arab, among other Lanka hotels and residencies, and Starwood Group looking for another development opportunity in Sri Lanka, identified as the emerging market in global hospitality and leisure industry. US-based global giant Starwood Hotels and Resorts Worldwide, the owners of the internationally famous Sheraton brand, yesterday signed the deal in Colombo with local partners to manage the first ever hotel in Sri Lanka. Sri Lanka Minister of Civil Aviation Priyank Rajaratne says that the ministry has decided to stop the operation of seaplanes for the national carrier Sri Lankan Airlines. The lease agreement of seaplanes with the Canadian company is to expire in around 4 months, and Sri Lanka will terminate operations of seaplanes then, the ministry says. The service will be given to a private sector under contract, according to the minister. The finance company, whose directors are embroiled in a controversial $390 million sale of shares deal with National Savings Bank on Monday, made another interesting disclosure of a 3-week-old transaction by one of its directors. The company said Dinar Vijayamana, director at TFC, sold 4,983 shares at 30 rupees per share on the 16th of April 2012, 3 weeks after the transaction was done. However, Mr. Vijayamana's transaction on the 27th, later than April 16th, of 2.9 million shares at 50 rupees per share was conveyed to the stock exchange on the same day, the 27th of April. There is something fishy, and all the transaction is now being announced when the fat has hit the fire, and one trader said. Vijayamana and Reina Silva, also director at TFC, and 2 others sold shares totaling a 13% stake in the company to the NSP at a premium price of 50 rupees per share, when the market price was 30 to 31 rupees per share. The President has ordered an investigation while the Securities and Exchange Commission is probing issues of insider trading and other possible irregularities. The loss-making deal by the NSP, said to have been engineered by its chairman Pradeep Karyavasam and some directors, has led to the loss of confidence in the bank, with some depositors asking, are our deposits safe? With that, I round up the news for today. Thank you very much and see you again tomorrow.